So very good morning friends, hope all of you are safe and hope all things well at your end. Today we are going to start with our new batch that is applicable for May 2021 and November 2021 CA final direct tax, right? So if I'm talking about this batch, then this batch will contain near about 70 lectures of 1.5 or 2 hours duration. So nearly about 150 hours of the total duration of this lecture will be there. We are going to start this batch from this today onwards, and we are targeting to conclude by 15th of the October. You'll get all the lectures during this period. Batch will be the recorded lectures, and you will be provided these lectures on application or Google Drive mode. Okay, so let us discuss today some basics of direct tax and this subject. Before we begin our main discussion on our subject, I would like to take just 5 or 10 minutes to have journey of the taxation laws in India. So first tell me, why government collect taxes? What are the objectives to collect the tax? First is, it is the biggest source of revenue to the government, right? This we know very well, right, these things. So I'm not going in depth of these things. I will just take 5 to 10 minutes to give just an overview of this thing, so that they can implement their policies. That policies will result in economic growth. How can government achieve the economic growth? Because of redistribution of income and wealth, right? Collect taxes from the rich people and distribute the same amount to the poor people. Recently, you know very well that Narendra Modi has just, our honorable PM has announced scheme that all the poor people will get their ration up to the month of November or something, right? Diwali, up to the month of Diwali, right? So, and then thereafter it will result in a social welfare. So here is the basic objective of tax. Sorry. Now can you tell me what things can make a good tax system? When we can say the tax system is a good tax system? So that we need to cover up 4 things known as canons of taxes, given by Adam Smith, father of modern economics, right? We know very well him. So first canon is talking about canon of equity. Canon of equity is based on principle of social justice. In first is horizontal equity and second one is vertical equity. So what do you mean by horizontal equity? Horizontal equity means if the 2 persons having same ability, they will pay same tax. And what is vertical equity then? Then vertical equity says that if one person has more ability, he will pay more tax. In CA intermediate and CA IPCC, students are asking to us, sir, why there are things that rich people are paying more tax and all this? Is based on this concept, that is vertical equity, right, of canons of tax. Second canon is talking about canon of certainty. Certainty means what? That is based on know your tax liability. The tax laws should be certain. There are certain rules, right, so that taxpayer can easily compute his income. He come to know that how much amount do I need to pay, when I need to pay the tax and all the things. So there must be some specific rules must be framed so that income can be computed with certainty, right? Third canon is talking about canon of convenience. Convenience means what? It should be easy to collect tax, right? Compliance should not be so stringent so that taxpayer runs away from this tax system. It should be so easy so that tax collection becomes very easy. You know, income tax department, if I'm talking about 10 years back when there was a manual filing and etc., right? So it was very difficult for sometimes to comply with all the provisions. Now they are going with this e-filing and all. Now compare your income tax e-filing with GST e-filing, which is running so much smoother than income tax, right? Not GST, right? Everyone is complaining about GST portal. Every day you will find complaint about GST portal. It is not yet up to date. It is showing this. It is showing this. It is showing this. So that what happens? People will fed up with this system, and they are not going to pay the taxes and follow the compliances and why to take the burden of these things, right? So income tax has made this very easy. And last is canon of economy. Economy means what? There should be a lowest cost of administration on the part of income tax department and also on the part of taxpayer, right? It should not be like that you are collecting tax of rupees 1 lakh and you are spending 1,50,000. Should not be like that, right? And on the part of taxpayer, if I'm talking about the one salaried person who is earning 5 lakh or 6 lakh rupees a year, if he is want to filing his income tax return and he need to pay 50,000 rupees of fees, no, right? It should be economical one. Okay, let's go ahead. If I'm talking about tax structure in India, so whenever government want to implement tax or levy a tax, they must be given some power by constitution. So Article 246 and Schedule 7 of Constitution of India gives power, in which there are 3 lists are given. One is a union, second is a legislative, and third is a concurrent list. If I'm talking about union list gives power to the central government to levy tax on, first you can see in the example, that is tax on income. It means income tax, but thereafter they have written that other than agriculture income. Means what? Central government has no power to levy income tax on agriculture income, right? Same way the excise and custom and all the things examples are given there. Second is a legislative list. This list is talking about power of state government to levy tax. First you will find that tax on income, that is agriculture income, because central government is not there to levy tax on agriculture income. So this is the power given to the state government. Okay, then excise duty on liquor and all that things. And concurrent list, both have same power to levy tax, right? First example, very good example that we are seeing right now, that is goods and service tax. State also have power and central has also power tax. Okay, taxation laws are divided 2 parts. First is direct and second is indirect. So if I'm talking about direct tax is levied on income of the person, while indirect tax is levied on goods and service tax. In case of direct tax, you cannot shift your burden, but in case of indirect tax, you can shift your burden to some other person, right? So it is basic discussion. Now, a journey of income tax in India. Now we are coming to our subject, right? That how the establishment of the income tax in India was done. Can anyone tell me when the first income tax act was introduced? Which year was this? It was 8060. Then 8086, third is 1918, fourth is in 1922, fifth is in 1961, which is the latest one we have right now as well. We are awaiting a new direct tax law, right? Maybe we can have the same in 1 or 2 years for the news. So income tax act in 8060, if I'm talking about, then it was introduced by the Britishers. Definitely at that time Britishers were ruling on India, so Britishers were there. It was introduced for the 5 years first time, and then it was replaced by the license tax, and license tax was there till 1886. In 1886, when the income tax act was implemented, then also first time in that act, taxation of resident and non-resident taxation, taxation of resident and non-resident concept was given. First time agriculture income was exempted from the purview of income tax. And another thing was HUF was considered as a separate entity for the purpose of tax. It was first time in 1886. Then it comes to 1918. As we know very well that income tax is charged on a net receipt. It means income minus expenditure. It was earlier that the thing was the same earlier also, but in 1918 the specific provisions for the purpose of business deductions were introduced in 1922 has played a vital role, right? Because first time in Income Tax Act 1922, first time was introduced that income tax rates will be laid down by the Annual Finance Act instead of Income Tax Act itself. So whenever we see the finance bill, we get the new rates of tax every year. The same was incorporated into the Income Tax Act according to the Finance Act, right? And then again the major role was played by the Income Tax Act 1922 is in administration. They have laid down the nomenclature of IT authorities and how the administration of these things will be done. Okay, and last that comes Income Tax Act 1961 came into force on the date 1st April 1962. The act was amended through the Finance Act, and first time this happens that rules for the purpose of this administration and all rules were framed in 1962. So we have that income tax rules 1962 with us, right? If I'm talking about the subject we need to study, then in IPCC and intermediate we are studying just income tax, but in CA final level you know that now area is very wide. Our subject name is also changed, that is direct tax laws. It's not an Income Tax Act 1960. We need to study direct tax laws. So what are the components of direct tax laws? First is the Income Tax Act that we have already discussed, right? Second is the Annual Finance Act, which I am talking about. Annual Finance Act, which are introduced to amend the tax laws when the finance bill was introduced, when the financial bill is being introduced in the parliaments, right? And which receives the assents of the president, then it becomes Finance Act. So currently for our study, Finance Act 2020 is applicable. Just a minute. So Finance Act 2020 is applicable for our syllabus, that is May November 21, and our assessment year will be 2021-22, right? So Annual Finance Act has been divided into 4 parts. First is part 1, which gives current rates of tax for the current assessment year. Part 2, which gives the rates of TDS. Part 3 is talking about the computation of salary and advance tax, all that things, and TDS on salary. And part 4 is giving idea about net agriculture income. Okay. Then Income Tax Rules 1962, as I said, Income Tax Act 1961 when introduced, and first time along with that 1962 Rules 1962 were introduced. So what is the purpose of introduction of rules, right? To make the proper administration. Income Tax Act says what to do, and rule says how to do, right? So if you have prepared a tax audit report, that is form number 3CB or 3CD, right? If you're during the articleship you have come across with this thing, then you have seen that things, that rule 6G, see rule 6G, below the form number 3CD they have written something like this. So see rule 6G. So rule 6G mentions that format of the audit report should be like this, right? So these are the rules. Another example I am giving you for the rules, that under the income tax, income from house property, one concept was there of concept of the unrealized rent. So what it says, it lays down 4 conditions, you know, and where such 4 conditions were laid down in rule number 4, right? If you want to claim unrealized rent as a deduction, then you must comply with the 4 conditions. We'll study in that particular topic. We're not discussing right now. So then circular is issued by the Central Board of Direct Taxes to deal with the specific problems and to clarify if there is some confusion. Circulars are binding on the income tax department, but it is not binding to the assessee, assessee can take the benefit provisions of this. Notification issued by the central government to make the provision effective. If they are introducing new sections or new provisions, then by which date it will become effective? So they are notified the same thing in the official gazette, and on the publishing date in the official gazette, certain provisions will become operative that particular day. CBDT also issues notification to make rules effective, right, and also amend the rules. And last, that is judicial decisions that we need to study in this our subject. Judicial decision, if I'm talking about, it's all about judiciary, because it is not possible for every act to give all the remedies, and there are certain interpretational issues will always be there, right? So then who will solve this problem? Then there is a role of judiciary mechanism. If I'm talking about High Court, then decision of the High Court will be applicable to the particular limits of the states, and decision of the Supreme Court will become the law of the land, applies to all of the India, right? So this is a basic thing we need to study. If I'm talking about our subject, I've divided subject into 5 parts. First is a basic, second is assessment procedure, third is appeal and revision, fourth is miscellaneous, and fifth is the international taxation. Direct tax laws is about 70 marks portion, and international taxation is about 30 marks portion, as divided by the ICI. Basic discussion, if I am talking, then it is generally things which we have already done in IPCC or intermediate, but not to worry, we'll study each and everything in depth, right? You are not supposed to worry that I have not studied in properly in IPCC and etc. I am assuming that you are not having any kind of knowledge about income tax, so we'll study from the scratch, so not to worry. Okay, so we'll study in this first part, we'll study about the computation of income, who is the assessee, TDS, and etc. In second part, we'll see the assessment procedure, that is who are IT authorities, what are their powers, how the assessment will be conducted by the income tax department, and etc. Third part will be about appeals and revision. Fourth part is all about miscellaneous topics, right, interest, fees, penalties, etc. And fifth part would be international taxation, in which we will study non-resident taxation, transfer pricing, advance rulings, etc. Okay, so here it is our subject. Now we are going to our main topic. So we'll begin our subject today with very first and foremost important section, that is section number 4. In every tax laws, the charging section, or we can say basis of charge, is a most important section, because it is a backbone of the each and every act. So under income tax, section 4 is a charging section. It says about it is talking about what kind of income, what kind of tax, when the tax would be levied, for what period tax would be levied, who will pay the tax, and each and everything, right? If we analyze that section, let's see. This charging section is a backbone of the act. It lays down provisions, what are taxable and what rates, income of which period is taxable. So it is talking about income, it is talking about period, it is talking about tax rates, right? It is talking about persons and etc. So first, levy of tax. This section is talking about levy of tax. It says that tax will be levied on assessee on his total income. So first word over here is a total income. On the basis of this section discussion, we'll move ahead with our further discussion, right? So total income computed in accordance with the provision of act. Okay, fine. Second is a persons, right? Tax is charged on the various persons. Third is period. I need to compute the income, but for which period? It is talking about that income earned during the previous year shall be computed and shall be taxed in the, and fifth is a tax rate. Fourth is a tax rate. Tax rate prescribed by the Annual Finance Act. Okay. So in this definition, we come across with certain words. First is assessee, second is total income, third person, fourth previous year, assessment year, etc. If I'm asking you that, if I want to compute income, then what things will require? If I want to compute income tax, then what things will require? So first of all, if I want to compute income tax, then I need to compute income first. Then I need to apply the tax rate on that income so that I can get income tax. Right? So as I said that I'm not going into the definition right now, but certain things we are discussing. Okay. If I'm talking about person, you know very well the definition of person. You have studied in the IPCC intermediate. It is individual, HUF, partnership from LLP, company, local authorities, OPBOI, artificial juridical person. So these 7 peoples are 7 persons, right? Now, tell me one thing. As I said, if I want to compute income tax, then I need 2 things. First is total income, right? As I said in this definition, in this charging section, that income shall be taxable or levy of tax is on total income. So I must know that what should be my total income. As we know that total income comprises of salary, income from house property, profit and gain from business profession, capital gain, and IFRS. These are the major 5 heads of the income in which the entire income is divided under the Income Tax Act. Okay. Then set off and clubbing provision, set off and carry forward rules will be applicable. If I applying all these things, then I will get one thing that is called as gross total income. Please be careful with each and every word, because certain limits they are mentioning only this, that if your total income is so and so, you need to comply with this provision. If your gross total income so and so, then you need to comply with these provisions. So we need to be very, very clear that what is GTI, where I am getting the total income, right? So after this applying all provisions, you will get the income which is known as what? Gross total income. And from this gross total income, if you reduce the deductions given under chapter 6a, ATC, ATD, etc., what will you get? You will get total income. So here it becomes your total income. So whenever any limits are prescribed that your total income is so and so, you need to comply with these provisions, then you need to reach over here and then you need to check. Got it? Don't worry, it's a very basic discussion. We'll study each and everything in depth, not to worry. Second is a tax rates. So tax rate, as I have discussed in that journey of income tax, I told that the income tax rates were introduced by the Finance Act. So Finance Act and Income Tax Act. Finance Act is talking about the normal tax rate, that is slab rates. What are the tax rate for individual, HUF, companies, and etc. That is normal tax rate. Health and education cess is also provided by the Finance Act. Surcharge is also provided by the Finance Act. If I am talking about the rates given in the Income Tax Act, then some specific tax rates given under Income Tax Act is tax rate on capital gain. As we know that 20%, 15%, etc. the rates are given in this. Tax on winning of lotteries and undisclosed income, etc. Earlier dividend distribution tax was also there, but now from 1st April 2020, right, Finance Act 2020 has removed the same. So these 2 things are determinants of the income. Now question arises, what I can say income under Income Tax Act. What do you mean by income? So first, before we begin this discussion about income, because it is very important discussion, right? So many things are depending on this. So let me give you one example. If for the financial year 2020-21, if a person having this kind of financial transactions is having annual salary of rupees 6 lakh, small business of rupees 2 lakhs, is having some side business and he has earned rupees 2 lakh rupees, bank FD earnings of rupees 1 lakh, so total 9 lakhs. And on the other side, there is a lottery income of rupees 2 lakhs, gift he has received from his friend of rupees 1 lakh, and he has sold one house and got a gain of rupees 5 lakhs. Now my question is, if you ask this person that how much do you earn, what he will say? Will he say rupees 9 lakh? Will he say rupees 8 lakh? Or will he say rupees 17 lakhs? You just make one assumption. And I'm damn sure that our assumption will match definitely, right? You might have faced this issue in your articleship also. If you have filed some income tax return, and if client is approaches you that I want to file my income tax return, he will give you certain details. Okay. So what happens? He will definitely gonna tell you, my income is rupees 9 lakhs. Now question arises, why? Why 9 lakhs? We clearly see that there is a 17 lakhs of the receipt during the financial year. Why the income is 9 lakh rupees only? Because, as I said, you have faced these things in your articleship also. If you are calling your client that sir, give me your details of the income and etc., he's gonna definitely give you the salary, income and etc. Then we need to ask him, yes sir, have you entered into any such kind of transaction of sale of properties or etc.? Have you received sir any other income which you have not mentioned over here? Then he gonna tell me, or he gonna tell us that I have sold one house for rupees 20 lakhs. Then we will again ask, what was the cost of that house? Say 15 lakhs, ignoring about the indexation and all that things. What was the cost of that house? Say 15 lakh rupees. Then we say that sir, there is a 5 lakhs of capital gain also there, and income is also taxable under the capital gain. Then he will say, oh, I need to pay tax on that also. Government is collecting tax on each and every things, right? So my purpose of this discussion is to just say that in a general terms, or I can say in common parlance, if you ask any layman about the income, he will definitely tell you income is a monetary return with some sort of regularity. If there is something regular income is there, then and then we will consider as a income. But income tax has a different point of view. What it says, however, a certain income which do not arise regularly, but it is specifically included under the definition of income under section 2 clause 24. I'll show you the list of that thing also, right? There is near about 22 items in that clause. So generally the perception is that the revenue receipt with some sort of regularity is taxable, it should be taxable, but certain capital receipt which is specifically included under the definition of income is also taxable. Okay, so as I would say that certain incomes which is in nature of capital but it is included. The definition given by Income Tax Act of income is an inclusive definition. Is an inclusive definition. Why inclusive? Or just tell me what kind of definitions are there. One is inclusive and second is exhaustive definition. Inclusive definition starts with the word includes. Say income includes. and thereafter they will give you the list. So there are some scope of the including or excluding certain things in that. Exhaustive definition is talking purely on the basis of means. Income means, it means the things which have written is the only thing we need to consider, nothing else. So it is income means. So here income includes the definition, the wordings of the definition is income includes, it is an inclusive definition. So certain capital receipts are specifically included under Income Tax Act, right? So here you might have heard some words like revenue receipt and capital receipt and etc., right? So which kind of receipt will be taxable under the Income Tax Act? Definitely a revenue in nature, but certain capital receipt, if it is included in the definition of capital income, then and only then it will be taxable. Otherwise each and every capital income will out of the purview of income tax, right guys? Clear? Let's see now question in your mind that, sir, what is a capital receipt, what is a revenue receipt? Let's see the difference between these two. Chal bhai. So first let's break down the income and then we'll move our discussion to the revenue and capital receipt. First is cash or in kind, second is legal illegal, third is receipt or accrual, and fourth is the net or gross. So income may be cash or it may be kind. Okay, if I'm a chartered accountant practicing, right? And if I'm having some client, instead of paying me a fees in kind, they are going to offer me a one car, sir, BMW car instead of fees. Then is this income taxable? Yes. First of all, I need to consider that whether it is income or not. Yes, it is income. Whether it's taxable or not, that will decide later on, right? I'm not talking about the taxability right now. I'm just talking about the whether it can be said as an income under the Income Tax Act or not. Because first we need to determine that whether it's the income or not. Taxability we will see in a particular heads of the income. Okay. So income may be in cash or may be in kind. Income may be legal or illegal. Income tax does not differentiate between legal and illegal income. Even if it's your illegal income, you need to pay tax on that, but illegal expenditures are not allowed. We'll see in the business profession chapter section 37 is there. Okay. A receipt and accrual. Income may be on receipt basis or may be certain accrual basis. For example, interest on bank fixed deposit, right? Income accrues when your right to receive is established and etc. And one more principle of that deemed to accrue or arise, so that we will discuss in the non-resident chapter. Last is net or gross receipt. Definitely a net receipt. All the expenditure will be reduced from your receipt, so net receipt will be taxable under the head income tax. So revenue receipt and capital receipt. Now we are going our discussion further on revenue or capital. When we can say the income, the receipt is a capital receipt, or when we can say receipt is a revenue receipt. So there is no single shot or single thumb rule is there, so that we can say that the particular receipt is a revenue receipt, particular receipt is a capital receipt. So we need to define some criteria, right? Chargeability will definitely see, as I said, that capital receipt is not at all income unless and until it is covered under the definition of income. Otherwise each and every capital receipt is out of the purview of income tax, right? So first let's take a criteria. Two criteria: fixed versus circulating capital, and second is a capital asset and trading asset. What are this? Let's discuss. Fixed capital does not affected by business procession. For example, if I am purchasing and selling a goods each and every day, does my plant and machinery, does my land and building in which all these things are affected by this process? Answer is no. So this is known as fixed capital. If I am transferring such kind of fixed capital, say plant and machinery, if I am selling plant and machinery, if I am selling my factory building, then income arising from such fixed capital will be a capital receipt. Okay. Now circulating capital. Circulating capital yields income, or I can say is affect the business process. If I'm purchasing or selling goods, say stock in trade, so definitely it will result in a income or maybe a loss, right? So it's a revenue in nature. If I'm dealing with the circulating capital, it's a revenue in nature. If I'm dealing with the fixed capital, it's a capital in nature. Then capital asset and trading asset. Trading asset means asset which are used in a transaction of our daily routine transactions or daily business transaction, say stock in trade. And if I'm talking about capital asset, as I have given you example, that is plant and machinery and factory building, etc. If I am dealing in a capital asset, then the resultant income will be my capital gain, which is taxable under section 45. If I am dealing in the trading asset, then income will be my business income, revenue in nature. Okay, we'll see one by one once again when we are covering the heads of income and everything. So no need to worry about right now. But this thing we need to consider. This is not only sufficient. We need to apply certain test. When can I say it's a capital receipt or a revenue receipt? For example, transaction entered into the course of business. What it means? What it want to say? For example, a property dealer, as I given in the example, a property dealer. For him, a selling of and purchasing of land and building, etc. It's a nature of business. So whatever the income he is generating from this activity, it is business income or revenue in nature. For me, if I am purchasing some land or selling some land, and if any income arises on that part, that is not my business in nature, so it's my capital receipt and maybe or may not be taxable, depend upon the taxability. So if it's following the purview of income, then it will be my taxable income, right? So I need to check that whether the transaction is entered into the course of business. Okay. Second thing, profit arising from the sale of shares and securities. So we know that we can keep shares for both the purpose, as an investment purpose, or I can keep as a stock in trade also. So whether the income arising from this transaction shall be a capital receipt or a revenue receipt. So I need to check motive. If my motive is to investment, then it is a capital receipt. If my motive is to dealing in the shares as a businessman, then it will be a business receipt and revenue receipt, I can say rather. And if it is a speculative, my motive is speculative, earning from the price movement every day, right? So it will be my speculative income. But sir, why we need to make such classifications? Ultimately it's the income, right? Then why we are dividing such things into 5 heads and everything? Because each of the 5 heads have their separate calculation methodology. If I'm talking about the salary, if I'm talking about the house property and talking about capital gain, they have given the mode of computation also, that how you are supposed to compute the particular income. However, the business profession and IFRS is missing this thing. They have not given particular format. So we will not find any format in business profession and IFRS, but you will find the format in IFRS, capital gain and in capital gain, salary and house property. You will find this thing. Okay. Third is liquidated damages. So there is a very landmark judgment of Supreme Court. Supreme Court said in the case of CIT versus Saurashtra Cement Limited that if any liquidated damages which is linked to a capital asset, then such receipt will be capital receipt and will not be taxable. Right? What happened in the case that company has ordered some plant and machinery to be supplied to their supplier. Supplier has made some delay in delivering the same. So that what happens, the company need to bear some losses and company claim damages from that supplier for the purpose of delay. So income tax department was asking for a tax on that because it's a revenue in nature. They said it is related to your business, so we'll consider it as a revenue in nature. So Supreme Court said that it is related to the business, though it's related to business, but it is linked to the capital asset, right? Okay, so it will be what? A capital receipt. Or this is a single transaction. Can it constitute a business? Can we say that? Say I'm a chartered accountant, practicing chartered accountant, and I'm a teacher by profession. Yes, definitely I'm a teacher by profession and CA by passion. The reverse in my case, right? So say I have got one opportunity in the month of October. As in the November there is a Diwali, so I got one opportunity that I can buy some crackers, fireworks and all, and I have wholesaler in my contact to whom I will sell entire stock in 2 or 3 days. So what I did, I ordered 1 crore rupees goods from the company direct. I received the same, and within 1 day I dispose of the same to all the wholesalers, and I earned rupees 10 lakh rupees out of this transaction. And thereafter no business of the fireworks I'm doing during the entire year. So can I say a single transaction can constitute a business? Can I say it is? It depends upon the intention. If I'm purchasing certain things with the intention to resell it and earning a profit, then I can say it's my revenue nature or a revenue receipt, or I can say it's a business. But if there is no intention to resell it, I have purchased some property to reside in it, then I cannot say it's my business in nature. I have made some investment in the properties that price may go up in 5 or 6 years. At that time I will sell it. It's my investment purpose, it's not my business purpose. So I need to check a particular things. Last is a gift. As we know very well, gift is always always a capital receipt. But gift is specifically included under the definition of income, section 2+24. That's why it is a chargeable at IFRS. Okay, so here was the basic discussion about our income tax. Let's see certain things from our study material so that you can get idea about the study material. Here I was talking about this our direct tax course. 2 books you will get. One is a summary and second is a detailed one. Okay, here are the features of this book. This entire course. You can contact me on the given numbers if you have any queries and all. Okay, so now let's go ahead. Let's have some from the study material. Here is the detailed study material that you will get. I have given one link in the description. If you want this study material on your WhatsApp, then you need to register on that link. As of now, you are not supposed to make any payment at the time of registration. Okay, you watch my demo lectures. If you find it that you are worthy to buy it, then you can contact me on the given number. Okay, first we are planning this time to give a 20% off on first 50 registrations. So if you are registering right now, and then you will be eligible to get 20% discount at the time of making payment. You are not supposed to make any payment right now. Okay, you can attend the demo lectures on YouTube. If you find it worthy, then you can go ahead. So here is the detailed material you will get. This is the format of our material. We have tried to keep the things as simple as possible, right, so that you can make some interpretation on your own and everything in a lucid manner. Language is very simple to understand. Okay, so first we discussed constitutional power and all that things. Components we have already discussed. Section 4 we have discussed. Important definition, I said that I am not going to discuss right now certain things. Okay, but previous year definition, let's take one example of this thing. So previous year means what? Generally a previous year means what? It's a financial year preceding to assessment year. If I'm talking about the assessment year, that is 21, 22, then what is the immediately preceding year? It is 2020, 21. So this financial year is known as what? Previous year. You know very well, right? In final level, I'm not thinking I need to discuss this thing also. But for example, generally a year starting from the 1st of April 20 to 31st March 2021. But one exception is there. If my business was newly started up on say a date other than 1st of April. Say I started my business on 15th of July. 15th of July. Then in that case, my year will start from 15th of July. If I am not earning any income earlier and I'm earning just there is a new source of income for me and that is for the first time, say 15th of July, then my year will be from that date on which the new source of the income was arise or a business was newly set up. Okay. Then we discussed the definition of person also. Okay, as I said, I'm not going in depth right now in any particular definition. We'll discuss it later on. Here is the chart in front of you. You know very well, right? That we already discussed. Income under section 2 clause 24, that is PGBP and all. You know that. See over here, dividend, PGBP, capital gain, specifically included under the definition. It's a capital receipt, but included under the definition of income, so that we are charging tax on this, right? Section 45. Then winning from lottery, again a capital receipt. It is not revenue in nature, right? It is not a recurring in nature, but though it is included in the definition of income, then we need to pay tax on that. Gift exceeding rupees 50,000. Once again, gift is again a capital receipt, but already included under the definition of income, so it will be under the purview of Income Tax Act, right? The principle we have already discussed, test we have already done, single transaction liquidated damages and etc. Right? Now one last concept is there. Let me tell you this thing. I know that there is no much time to be wasted on this part because we are going to discuss it further in whenever we discuss certain topics. So certain definitions and everything we are going to cover up. So that's why I ignored right now. Okay. From next lecture we will begin with the new topic. Probably income from house property and planning. Very small topic, so we can conclude in 1 or 2 sessions. So a new concept is that application of income versus diversion of income. So what is application means? First of all, we need to differentiate it because taxability is different in both the cases. Application of income means what? Firstly, I am receiving the income, then I am applying for certain purpose, right? It is known as what? Application. So first income will reach to me, then I will spend it. Okay. See, spending of money after it being earned by the assessee. Income arises or accrues to the and reaches to the assessee. Income is applied to discharge an obligation, whether self-imposed or gratuitous. It means I have some obligation and I paid that amount toward that obligation. Such income shall be charged in the hands of, it will be taxable in the hands of, right? For example, say, what did example want to say? Say, here is Mr. A. Mr. X is there. Here it is Mrs. Y, and here employer of Mr. X. So Mr. X was earning say rupees 1 lakh, and he need to pay 10,000 to his ex-wife. Now he is divorced, so he need to pay as an alimony amount, right? So what he is interested to what he has given instruction to his employer that you just pay me 90,000 rupees, give directly 10k to his ex-wife. However, the total income of Mr. X is rupees 1 lakh. He is receiving rupees 90,000 only. Can you tell me what will be the income for the purpose of income tax? Definitely rupees 1 lakh. because it is a clear case of application of income. Here Mr. X is earning rupees 1 lakh, Mr. And Mrs. An employer is just a medium that transferring income to Mrs. Y. If the case was like that, if Mr. X was not under obligation to pay Mrs. Y all these things, then what will the amount received by the Mr. X? Rupees 1 lakh definitely, right? Okay. It is not the employer paying from his part. He is just retaining something from the salary. So actual salary is rupees 1 lakh. So income would be 1 lakh. So first income earned by Mr. X is rupees 1 lakh. Then 10,000 is applied, right? So I can say it's application of income. So entire 1 lakh will be taxable. Okay. This 10,000 will also be taxable in the hands of Mr. X. This is known as application of. Second case is a diversion of income, where the income is diverted before it is earned by the assessee. Okay, income is diverted before it is earned by the assessee, and income does not at all reach to the assessee. See, income does not at all reach to the assessee, it is diverted at source. It means it is not at all my income and it will not be taxable in my hand, right? Because there are some obligation in the source that I need to make this payment, or I need to transfer this and this amount. Let us take the example. Say charges obligation on source on which the income is diverted and not on the assessee. So it is on source there is a charge, okay, and not on the assessee. Here we can say that there is a obligation of Mr. X, that was the assessee, to pay the amount to Mrs. Y. It shall not be charged in the hands of assessee, so it is not taxable. For example, C. Messrs. ABC a partnership firm in which A and his two sons. For example, let's see. ABC a firm is there in which three partners A, B and C. There was condition that if Mr. A dies, then B and C will continue firm, but there is condition. There is a condition. What? That 20% of profit, the firm that is Mrs. ABC will pay 20% of profit to Mrs. D after the death of Mr. A. There was a precondition. So can you tell me what is the income after the death of Mr. A? What are the income of Mr. B and C? Say firm has earned rupees 1 lakh. So can I say if both have the same equal share? So can I say both having a same share of 50,000 each? Answer would be no, because out of which first 20% will be given to Miss D. Right, 20,000 will be paid to the Mrs. D, and 80,000 is only left. So now the income of B and C only 80,000. Right, it's a diversion. Here the firm has obligation to divert and not the assessee B and C. Right, so it is not at all earned by the B and C. Okay. Second example, if I am giving you, it is very easy example. Say A, B and C are the co-authors. A, B and are co-authors. A publisher has given royalty of rupees 6 lakhs. He has given entire amount to Mr. A. Okay. And what Mr. A did? Mr. A did transfer 2 lakh to B and transferred 2 lakh to C on their part. So we cannot say over here that income of A is rupees 6 lakh. No, income of A is rupees only 2 lakh, because there was an obligation on Mr. A to transfer this 2 lakh rupees from the source itself. Right? So here it's not at all an income of Mr. A. So we can say it's a diversion of income, and only 2 lakh rupees will be taxable in the hands of Mr. A. Folex will not be taxable in the hands of Mr. A, right? So here was the end of our discussion. At the end of the study material, I have given the summary of case laws. Okay, so you can complete the entire chapter, all the provisions of the particular chapter at once. Okay, so thank you for joining, guys. Hope you like this video. We are coming up with a new topic in our next session, probably income from house property and planning. Okay, so definitely get this video in 1 or day 2. Okay, thank you so much, guys. Till then, if you like this, then please share it with your friends. Okay, registration is open, so hurry up, guys. English and Hindi both are version available. It's exclusive English, and English in the mix is also available. So whatever the comfortable languages you have, you can opt for the same. Okay, so till then, thank you so much, guys.